Now, the consumer confidence is back to December 2021 high once again. And if you can recall, that's something that happened back then. And we are now exactly is repeating the same situation. Because now the retail stock trades are very bullish. I can see that basically people left comments in my videos are saying that they are so bullish right now. They don't buy Nvidia, they don't mind buying this Google, they don't mind buying all the stocks at a high level right now. To me, this is always something to be very careful. Now, I'm not saying the market will crash, but I think that a pullback the next 2-3 weeks is very highly going to happen. All right. And because of that, right, I checked my indicator. I realized that the boys aren't buying. Yes, the boys ain't buying. And this is the reason why I think you should get into the market right now. So disclaimer apply as usual. And let's look at the chart. Now, look at the Dow Jones. Let's take a look at the Dow. Now the Dow has been basically been moving on the sideway, but look carefully, it's trading below the MA moving average. So I kind of believe that we could be going back down to 38,160 in the near term. Okay. And if the market can actually stay supported, we may see the Dow going back up again to even 40,000. All right. So this is actually possible if the market stays supported at about 38,160 range. But if the market do continue to break lower, then I suggest to you 37,100. I believe that this will be a very strong, a good level to buy. That will be a good time to buy so that you can backtrack for the recovery stage in the later part of the year. Okay, so for us, we have put a bit of short position at the moment right now, somewhere around this area. Okay, with a tight stop loss, and we'll see how it goes. All right, but of course, again, if you think that the market is going to go up, you can buy, of course. Now, one thing to note tonight is the core CPI data. We're looking at 0.3%. I kind of feel that today we may see a stunner of 0.4% instead. Now, this is just a personal feel. I don't know how it is feeling, but just kind of be biased on one side. And probably I believe that we've been paying our nose through for our goods and services. So I don't think that it's still going to stay at 0.3%. So let me know in the comment box. Now, one thing to note is that this lady, I've been following her. Her name is Danielle Martino. She's a very straightforward uh, forecaster, market analysis, economist. She says that right last week the job report is a ball of contradiction and confusion, which I totally agree because we can see that the unemployment data has hit 4%, but yet itself the job have increased. So it's because of the part-timers. The part-timers job have increased, but the full-timers have went down. So if you look at it from this perspective, seriously, it's all right, even though the part-timers are in, but it doesn't really give the right feel of the economy. Don't you think so? So that's the reason why she questioned the data. She questioned how accurate or reliable is the government economic data. And I kind of raised my hand and I agree with her. So let me know. All right, but we look at the fear and greed index, we can see something very interesting. The index showing now is a neutral zone, but if you look carefully on the S&P 500 versus its 125-day moving average, you can see that we are actually at an extreme greed area, right? Extreme greed area. And one thing to note, let's go into the indicator directly. Let's bring it in. Okay, you can see right now, okay, just to the overview right here, you can see that we are now way trading above the moving average. So every time when the market is surging, okay, there'll be a point when the market pulls back, it goes right back to the moving average. So if you look at this right now, if the S&P is a pullback, we may have to see S&P going back down to 5080 level. Now, compared to the current price right now, we are still pretty far away, right? Don't you think so? That's something to note. And at the same time, we look at the stock price strength, we are actually coming down. Okay, that means that we took the net new 52 weeks high versus the lows on NYSE. We are actually having fear in the market. This is it contradicts, right? And also the stock price breadth is also indicating extreme fear at the moment right now. It really contradicts. And the thing is this, okay, the put and call options is showing that people are still pretty complacent. And market volatility is at neutral, safe haven demands at fear, the junk bond demand is at neutral. So you can see that the market seemingly is towards the sell side, but yet the stock market is still rising. This is something very interesting, okay? So this is where the main thing comes in. Now, Game of Trades is one of a few YouTubers I follow the channel. They are good, so I'm going to share this with you. You can subscribe to them too. Okay, so what happened is that they actually using the sentiment trader. Okay, they realized that right back then, when in December 2021, okay, the consumer confidence level for them has hit a high, and of course after that we know that the stock market pulls back about 15%. So after a few years later, we are now back to the same point, and of course the stock market now is at a high zone. So is it going to do a 15% pullbacks in the near term? Well, I don't think 15% will happen, but I'm pretty confident a 5% should happen. Okay, so this is my personal view. Let me know in the comment box as usual. All right, and if you look into detail, this is where it get interesting. Okay, let's go back to 2021. Okay, now in 2021, you can see right here, the RSI hits the high, which is exactly what happened recently. And then what happened? The market breaks below the moving average, which has happened over here. And it came down with RSI hits the bottom, which also had happened, okay? And the market rebounded back to the moving average, which is where we are right now. So if you look at it, guys, if the market really breaks back below the moving average, we could actually see a new low, because that's what happened back in 2022, in fact, after that. So is it going to happen? Well, I think it may happen, okay? Because if you look at the whole movement, it's like a double top, and the market look at the shoulder blades. So there is a possibility of the 37,000 happening, all right? So for us shorting the market right now, the risk reward ratio is about basically 2 risks versus potential 10 units of rewards. Yes, that means that we are receiving 2 potential up to 10. Okay, the risk reward ratio is pretty good, right? The risk is here, the reward is here. Okay, so that's the reason why as a trader, we are kind of confident right now, but we are watching this very closely. We're not calling for sell immediately or must sell right now, but just be cautious, okay? And because we look at the gold silver ratio, we can see that back in 1987, okay, before the market crash, okay, that was back then, the gold and silver ratio broke down, and after that we saw the 1987 crash in the S&P. So now we are seeing the same thing right now. There's a breakdown on the gold and silver ratio while the S&P is still trading high. Is it a sign to be careful? That's the reason why you need to be cautious to the wind. Now, I'm not saying that the market will crash. Please understand that. But I'm telling you, just be very cautious, okay? And to wrap it up with my own indicator, you can see right now my Boy's indicator is still calling for sell. The momentum has built into sell, so it's just a matter of time. Today, the key support will be at 38,736. If the market can stay above 38,736, the market can rebound back to the 39,000 level. But if the market fails and breaks below 38,736, then the selling should be able to bring it back down, going lower than yesterday to about 38,388 level. A very nice number. So let me know in the comment box how you feel the market. Remember, we're just asking to be careful. Things can get dicey, especially after today. Right, that'll be all for today. Take care and subscribe to us. Kel signing off. Take care. Bye-bye.